Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks which are buzzing in trade. I am Agam Vakil. Let's welcome our experts then. We have Sameer Kalra of Target Investing and TS Harihar of HRBV Client Solutions joining us on the show. Thanks for joining us, guys. Today on Hot Money, we will discuss we talk about the impact of the auto slowdown on ancillaries after recording a weak auto quarter. We analyze its spreading pain across the sectors. We also discuss the pharma slowdown impacting Biocon. Biocon recorded a strong first quarter, but the stock hit a 52-week low. In fact, it is currently trending at one as well. We speak to our analysts to understand if there is more downside in store for Biocon. We also ask our analysts about their mid-cap pick for the second quarter. And lastly, we speak about Ujjivan Financial and the impact it will face after the listing of Ujjivan Small Finance Bank. Let's open the discussion then, and let's start with the auto ancillary space. But before that, let me get in Yatin Mota, who is here with us to tell us about all that has been, causing a problem in the auto industry, and that has possible repercussions for ancillaries. Yatin?
Agam, if you look at the entire auto sector, it has been slowing down. A lot of original equipment manufacturers, including the likes of Maruti, Tata Motors, Hero Motocorp, whoever you name in the four-wheeler, two-wheeler space, as well as the commercial vehicle space, have been shutting down their own plants in order to control inventory. Now, in a case wherein the OEMs order flows are stopping, clearly there is an impact on auto ancillaries who supply important spare parts to these auto companies. In fact, if you look at the large auto ancillaries, a lot of them have been shutting down their plants in order to not only adjust the inventories with OEMs, but also the factory inventories which are sitting at the plants. In fact, if you look at Bosch, they announced a 13-day collective shutdown in the month of August. They will shut down the Nashik plant as well as the Gangai-Kodan plant to avoid inventory buildup. Similar announcement was made by Jamna Auto, which supplies spring leaves to commercial vehicle players. They are market leaders in the segment. Here also they'll keep the plant shut in October. In fact, they announced to stock exchanges that the plants might not run or partially run on certain working days in August 2019. And there will be regular cleaning work which will be taken up. So on an overall basis, a lot of auto ancillaries are indicating shutdowns, because of which there could be a potential impact on the second quarter earnings as well as the quarterly performance.
Okay, Yatin, thank you so much for joining us and getting us those details. So there you have it. There is a little bit of pain, especially and after the pronounced production cuts that some of these auto ancillary names are seeing. But let's open this discussion with our experts. Mr. Harihar, your view here now, and how would you play the sector?
See, I think the pain is definitely there. We have been seeing it for the last, I would say, a couple of quarters. The pain is visible. And cases like Bosch and Jamna Auto are actually just, I would believe, the tip of the iceberg. And we could see a lot more such cases coming up in the next few years. I think what's happening for the auto industry is actually, it's what I call a double, or I would call it triple whammy. See, firstly, companies like Motherson or Bharat Forge, which are largely dependent on the US truck market, they are seeing a slowdown in sales there. Secondly, I think the others which depend on India, like a Jamna or a Bosch, they're largely India-dependent auto ancillaries. They're facing a problem because of slowdown. I think the third part of the puzzle, which is actually brought this into the fore, is that banks have stopped funding inventories. Right. Now, whether it be a dealer, whether it be auto ancillary player, increasingly banks are saying that we're not willing to fund the inventories because they are a little worried about the future cash flow prospects of these ancillary stocks. So I think that has probably, tipped the whole game, and the whole thing has come down like a pack of cards. But I think this sector is in for a pain at least for the next 2 or 3 quarters. So while we like probably an odd stock like Amar Raja batteries, which makes automobile batteries, I would ideally suggest that investors should stay off the auto ancillary space for now.
Okay, pain in store for at least a few more quarters. Sameer, would you agree?
So I think right now whatever bounces you're seeing, whether in the OEMs or the auto tanks, especially this month, I think they're again hope dependent, like they were in December. That there will be this kind of respite due to the festive season and the base becoming smaller as well. So I think that will get crushed out because right now, even if you see the registrations for the first half of the month for August, they are down 15% for passenger cars.
Right.
And month on month, they are 40% down till late.
Okay.
So that is going really bad monthly.
Right.
So I don't think so. It's only limited to banks funding the whole system. It's maybe the leniency which they were showing that, if you have 400 cars in your stockyard, they were allowing you to purchase more 100 on that.
Correct, yes.
Now they have stopped allowing you to over leverage your books as a dealer.
Right.
Now when they're taking a constrained look, this all thing is happening. So that previous 2 years kind of continuous pushing up of the inventory, pushing up of the balance sheets is now going the other way. So that's why it has a systematic issue. It doesn't have a cyclical issue. So I think it might just stay there for maybe more than 2 to 3 quarters, and you might have to rationalize the expectations out of the sector. So I think I don't see any upside down for at least next 3 to 4 quarters.
Okay, so we have a consensus here: curtailed credit, and of course the startling lower registrations that we are seeing may not augur very well for the entire ancillary pack, and that's something that we're going to keep for now, considering both our analysts are expecting weight pain in the next few quarters. But let's move on and talk about Biocon. It's currently, as I was suggesting, at a 52-week low, and it's had a reasonably strong quarter. And Biocon is not like many other of the pharma drugs. It has it deals in slightly differentiated products, and of course it is also focused in terms of the CRAM, or for that matter, research and development. That said, as you can see on your screen, we're still looking at a substantial 30% cut on a 12-month, 6-month, and a 9-month basis. Where do we go from here? What's ailing the stock? Samir, I'll start with you once again. Where do you stand here?
So I think there is still sufficient downside. If you see before the bonus, and there was a good amount of rally in Biocon, even when the whole last 2 years pharma sector hasn't done well.
Correct.
Biocon was an outperformer. That was driven on the R&D expenditure which they were doing, and the launches which all the community hoped for to come after 2 years, which is 2019 or 20. Now somewhere that pipeline is getting delayed, and the launches which have been done are not gaining that much traction as expected, because the competition has also kicked in at the same point of time. So I think that the R&D pressure which they have done in past couple of years now is coming on to their books.
Okay.
So even if you're showing a good amount of margin, that margin is not that sufficient as per what estimations were there past 2 years.
Correct.
Or what the product offered in amounts of the scope of the market, the traction it would gain within a certain period of time, that is not coming out on the books. So that's where the disappointment is there, though the quarter 1 results were better off. But still that disappointment is there of that the multiple they were having.
Sure.
That's around still a 35-40 times multiple.
Yeah.
Right? Even if you extrapolate quarter 1 results.
Yeah.
So
correct.
I think that will deteriorate to at least 25-30 from my point of sight.
Okay.
So there is still sufficient downside, but there might be certain bounces, but I don't see it as an investment rational right now.
Okay, at least a 25% de-rating on the cards. That's from Samir's point of view. Mr. Harihar, what about you?
No, we actually like the stock at current prices. I think a couple of points. Number one, I would agree with what Samir said, that when since 2016, when the correction in pharma started, this was probably one stock that not only held but also appreciated during that period. When the Sun Pharmas and Lupins of the world were falling like 9 pence, there was one stock that held on, largely because they had a bigger focus on the high-margin biologicals business. They were into biosimilars. I think all that kind of played in favor of them. They were not exactly the outsourcing game like a Lupin or a Santo. I think so that worked in their favor. Having said that, I think today what we are seeing is two things. Number one, there is a certain amount of panic reaction to the 483 that has been issued on the Malaysian insulin plant. So that I think is probably playing on the stock sentiments. Number two, valuations were a little steep. So, we think that is probably a slight rationalization of valuations that has happened. So, we would believe that from these levels, probably downside risk may be limited. Also because, they have this very strong research subsidiary in the form of Syngenta, which the value of that company is not fully factored into the valuation of Biocon. So I think that would again be a kind of a hidden asset as far as Biocon is concerned. So if you have a 2-3 year perspective, I would believe it's a good level to buy Biocon. Will it go lower? Probably yes, hard to find the bottom. But I would believe that from a fundamental perspective, this seems to be a fairly good level to get in and start buying Biocon.
Okay, so we have mixed views here, and well, we actually have, while one of our experts is suggesting an avoid, the other one is actually saying that there could be some value in start nibbling into the stock at current levels. Let's move on and then talk about a mid-cap stock that you can keep an eye on as we move into the next results season. Anything that stands out basically which could possibly buck the trend in the markets given the kind of volatility and actually see further advances. So Mr. Harihar, I start with you. What do you like right now?
So India Cements, I think, could be a big positive surprise in the coming, probably I would say, couple of quarters. If you look at the overall results of June quarter, I think one of the few sectors that actually stood out is cement. In fact, cement did exceedingly well. They had advantage of volumes and also an advantage of price, and I think both the advantages are visible in the numbers of India Cements. South-based, a very large South-based company, strong credentials. I think they have got over the problem of debt that they had about 8 to 10 years back, so that is largely behind them. So I think if I were to buy a mid-cap stock, probably India Cements would be a good stock. I think they have got growth in their favor, they've got margins in their favor. Overall, I think it is probably a very good bet if you want to bet on the infra story in India and the increase in cement prices. I think at about 75-80, it seems to be a good bet.
Okay, so well, India Cements looking good for now. And of course, moving on, Sameer, what about you? What is that? What are you interested in right now?
So I think IGL is one which I think can consistently give you that kind of a leg up as compared to what markets or what phase of earnings you're entering into. So I think IGL has shown a good volume growth on CNG level as well compared to MGL and Gujarat Gas.
Right.
And the only concern is the growth of the margin, which I think will come out in Q2, Q3 much better, because over there the spot and the renewal of contracts happen. So I think there'll be lower cost of purchase over there.
Right.
So that will help the gross margins to expand much better for them. Okay. And I think more consistent going forward, if I see the traffic wise, I think IGL will be better on terms of volume growth traction as well.
Sure.
So I think IGL is a better pick in Q2.
All right, so there you have it. That's IGL. Of course, and we have seen, there's no doubt about that, there's been positive traction in IGL as well, along with some of the other city gas distribution names. But with that, we move on to the final topic of the show. That's Ujjivan Small Finance Bank, which has filed a prospectus with the SEBI for an initial public offering. Remember, the lender is nearing the deadline to list separately. Before we go to our guests, let's also get in Shefali Malik to understand the proposed plan. Shefali, what do you have for us, and how does this pan out for Ujjivan?
Well, to start with, they filed for this IPO mainly because they had to meet the deadline, which is Jan 31st, 2020. And what this will do is that this will basically create two listed entities for the same business. So because of that, there will be a holding company discount for the currently listed stock, which is the Ujjivan Financial Services. And in the Indian listed space, the holding company discount is generally 30 to 60%. And most of the brokerages are assigning or assuming the holding company a discount of 40 to 60% in this case. So Macquarie is saying that there might be a 40% discount, Equirus is saying 60% or maybe even more, and Edelweiss is about 40%. There is a brokerage, Nomura, which came out yesterday with a note. According to them, it could be as high as about 80%. So that'll be interesting to see. Yesterday the stock was down around 1.5%, today close to 4% last I checked. So we'll need to watch the stock price movement over the next few days, and also what the competitor Equitas also does, because the management has said that in case Equitas gets approval from Reserve Bank of India with regards to the proposed scheme of arrangement, then Ujjivan can also follow suit. So we'll be watching out for all these developments and hence the impact on the stock price.
Okay, Shefali, thanks for joining us and getting us those updates. So, well, let's pull up Ujjivan Financial, because it certainly is for now, well, very, very volatile, and it's down around 3.5% for currently. But Sameer, what's your view in light of this latest development we've had?
So I think, see, if I'm currently a holder in Ujjivan Finance, which is a listed one, I don't have any incentive to hold on right now.
Sure.
My first priority is to exit, because even if I'm at a 40-50% kind of a holding discount, there's still, I think, at least from my side, 30 to 40 rupees downside from here.
Correct.
Because for me, currently holding Ujjivan Finance doesn't make my entitlement to Ujjivan Small Finance, right? So there's no relation over there.
Yes.
So I think wait for the IPO to come out, see how the response is. I think if you don't want to bid for the IPO, then it becomes a better sense to have invest in Ujjivan Finance. But any which way, as an investment theme, I don't think so microfinance will give you that much of a money maker situation as they did in last 5 to 6 years.
Right.
And I think now everyone will go conservative, and microfinance will be the biggest burn through over there.
Right.
And if you want to have a exposure, I think have it through IndusInd Bank. They have a Bharat Financial Network now.
Sure.
So I think that helps out in reaching the micro lending book rather than anything else.
Okay, so avoid, and well, there's an alternative suggested here in IndusInd Bank, but Mr. Harihar, where do you stand here?
No, I think broadly I would agree. We are very, very cautious on the NBFC/MFI space. I think the best days are over, and we saw it in the recent listing of Spandana Sfurti, the kind of pressure the stock came under after listing. I think there is a major negative sentiment because the view is that once upon a time, I think MFIs could raise money at low cost, give away at high cost, and maintain NPS at very, very low levels. I think all that has changed. Costs have gone up, yields have come down, and NPS have gone up. So I think the three basic pillars that defined an MFI company, I think those three pillars have come into question. So I would believe MFI is we have to probably wait for the entire business model to reorient itself before you start buying MFIs. When it comes to Ujjivan, as your analyst also rightly said, once this happens, this hive-off happens, Ujjivan will start quoting at a discount. So there is no point in buying Ujjivan. Whether you should buy Ujjivan Small Finance Bank is something I think they have time till Jan, so we have to see when the IPO comes out, and then we will take a call post-listing. But I don't think you should really be in a tearing hurry to go in and buy the stock at this point of time.
Okay, I guess it seems to be a no-brainer for now, considering we have a consensus, and well, with good reason too. So on that note, I'm going to thank both our experts for joining us and taking us through their views on the various stocks that we have addressed. And on that note, it's a wrap on today's edition of Hot Money. But Ask BQ is up next. Stay tuned to Bloomberg Quint. We'll keep bringing you more.